I guess Mitul Kotecha, Global Head of Foreign Exchange Strategy at Agricole. Mitul, I can't really start with anything else but Europe at 130 odd at the moment against the dollar, and all the bad news out there. What's going on here?
Well, as you say, the news is getting worse. The expectation
was looking good yesterday, wasn't it?
It was looking good. It was looking good after the weekend. The hopes that we'd see a deal clinch for a second bailout as early as today at the EU finance ministers meeting. Obviously, complete disappointment. The meeting's not going ahead anymore.
Well, it's a teleconference now.
It's a teleconference.
Everyone's dialing in.
Well, exactly. They could do that and save themselves a lot of carbon emissions and, well, fuel bills, couldn't they?
Good environmental footprint. Why not, right?
Yeah. Anyway.
Well, they need to do all they can, really.
Okay, well, you know, they could bring the debts down that way, Mitul, sorry.
No, it's a good idea to have a teleconference, absolutely. Saves money, but the reality is you don't get much agreed in teleconferences in Europe anyway. So I think we are going to see more disappointment. Markets are going to be very, very cautious. Greek officials have pledged to stick to austerity, but it just looks like there's more and more speculation of a Greek exit almost by the day, and I think, you know, you're having senior officials in some countries now openly talking about this. So.
Well, hang on. No. You said it was looking good yesterday. It hasn't been looking good for 2 years, so...
Okay, yeah,
relatively, right?
You're absolutely right. But
okay.
Yeah.
But why does it have to be in writing now? Why does it have to be these two Greek political parties putting it in writing that they affirm that they're going to stick by these austerity measures? What good is that going to do versus a verbal affirmation?
It's a good point. I think I think there is some need from Europe, at least, to get some of the missing. There was, I think, 4 or 5 missing items that they wanted to push for. So there was a gap of 325 million euro, for instance, that they wanted to get some sign that Greek officials were going to stick to that.
But it's almost like, you know, with the amount of austerity that's already in place, the amount of austerity that they may need to do in order to meet this 2020 target that they have. Now, I've been saying this morning. It's like. Death by 1,000 cuts. I mean, it's just every time. It's almost getting to the point where the rest of the Eurozone has been vindictive towards Greece, that they may go, hang on, we don't want to stay in the Eurozone, and Merkel and Sarkozy are going, no, but you will stay in the Eurozone.
Yeah, well, it's true. There's only a limit to what a human being can take in terms of austerity and deficit cuts. You know, you lose your job, you retire much later, you've got taxes go up, and certainly you can understand the tensions within the country. Of course, that's escalating into violence, and that's creating a lot of problems. But I don't think there isn't any more room for austerity on Greece. I think that the problem that we have is austerity is leading to weaker growth, leading to more austerity. It's a vicious cycle.
Okay, but I think we're ignoring the fact that the euro has actually come back off its lows. We're seeing a second leg up now because of those comments coming from the Chinese Central Bank.
It's still 130 odd.
Yeah.
Well, okay, in the currency space, I mean, what, 0.0061 is kind of a move upwards. So that's what we saw. And basically, what do you think about the Chinese Central Bank? I'm saying they're going to buy more European holdings.
Well, I think it's interesting that these comments come out now, you know, at a time when there's more and more tension and pressure on the euro. Obviously, it's a sign of commitment towards Europe. China are increasingly heavily invested.
But China has no choice, though, right?
They don't have a lot of choice. They have a lot of investment in Europe already. They're looking to invest more, and I think they want to push edge European officials into some form of agreement. If Greece leaves, the biggest risk is that Europe falls apart, because it's not just about Greece, it's what happens to Portugal and other countries in Europe. So I think China are getting worried.
But do you think that's priced in the euro right now? A Greece exit?
I think markets haven't fully priced it in. I think if Greece leaves, there's 2 ways to look at it. The euro might rally because Greece is gone. But the other side of the coin is if it does rally, it might be sold into heavily because people start worrying about other countries.
Then we look at Portugal next.
So when will China's exports rebound? When will we see by the end of Q2?
I don't think we're going to see a quick rebound. I think the reality is that Europe is a big trading partner for China. Growth in Europe is weakening this year. In a mild recession, it could be a lot weaker than that. So I don't think we're going to see a big rebound in Chinese trade. In fact, that's one of the reasons why we only expect a very gradual, say, 1.5% appreciation of the yuan this year.
Yeah, let's stick to currencies. I want to talk about the move in the yen. I mean, did you see this bounce yesterday up 2.5% or something after the BOJ expanded?
Naturally, these bounces up always come when as soon as I come back from Tokyo. So my trip would have been that little bit cheaper while I was there. It happens every time.
How high will the dollar-yen go?
He feels a little...
Well, could you let us know next time you're there?
The last time they intervened, and it moved up 5%. And, you know, anyway, it all counts.
Yes, okay, so the yen, yes. Well, next time, when should Rish go back to Tokyo? When will the yen be weaker? How about that?
Well, I mean, our forecast is dollar-yen to get to 85 this year, but I'm cognizant of the fact that each year analysts predict a weaker yen and each year analysts get it wrong. What you really need to see is bond yields between the US and Japan widening further, and that's why yesterday's move helped, because JGB yields came off, US yields are edging higher, So dollar yen is getting that extra bit of lift.
85.
Yeah, well, 85. I mean, it could be a big call from current levels for sure.
That's a big call.
That's talking about another carry trade.
And of course, yeah, I mean, the assumption there is risk normalizes. We get U.S. yields higher, Japanese yields don't move higher. It's a bit more of a normal situation. Of course, there is a big risk.
And when is that going to happen? So Rish knows and puts it on his calendar. Get the vacation
Well,
request in?
Q1 actually our forecast is still around 77, so we're not looking for a big move unless we see huge intervention, which seems unlikely. So I think it's
Put your vacation in, Rish.
Okay, Mitul, thank you so much for joining us. Mitul Kotecha there of Credit Agricole, Global Head of Foreign Exchange Strategy.